Chart of the Week with Redmayne Bentley.
You're listening to financialradio.co.uk. My name's Giles McMullen, chatting to Bill Rook from Redmayne Bentley. He's going to be looking at some charts for us this week. Bill, we've got some smaller stocks to look at this time. Recently, we've looked at indices. We normally look at those. We also have been looking at the commodities markets and metals. But this week, you're focusing your attention elsewhere. Why is that?
Well, the big companies, the quality companies, we're already holding on to those, and we've got a bit of cash, we've got some commodities. The markets are tracking sideways, but there's some spice to be had from the smaller companies, I feel.
And which company would you like to start with? Should we go with Ampex?
Ampex, historically, this is a little technology company in America, and this is the sort of thing we're looking for. The thing to watch for when you're looking for a small company is a good chart moving upwards, preferably sideways before it takes off. And this one takes off where the blue arrow is coming through in October, 21st of October 2004. Notice that it's after the tech boom, so this is all. These shares are all going up after tech. So that's the first indication that things are changing here. This is without news, just looking at chart and price action, and we have a new high coming through here on that day. Now this is mirrored by what we could look at the NDX indicator at the top, which shows which gives a measure of strength, and this is supported by the inverse fissure, which is showing trend or indicating the trend is supporting the move, but instantly the share price goes sideways, and this is characteristic, I think, of a share with potentially explosive potential. And then where the first horizontal line comes in, we have a buy signal at around the $7 mark. I make it on the 29th of November 04. That's $7.9. That's a new high with the yellow bars at the bottom, which are indicative of higher than normal volume on a short period of time, coupled with longer term trend volume. So that's the magic mix, I think. A new higher than normal volume short term, and longer term volume looking good. Couple that with a high NDX, which is showing this good trend strength, and confirmatory from support from the inverse fissure, and we have potential mix of a breakout.
And it's certainly performed well, hasn't it? I mean, the chart was looking at what's that, $4 or $5, and now what are we? The chart goes up to March.
Goes to about. Yeah, it goes up to this on this particular scale, and there hasn't been anything like it since. This goes out. We sort of come out of this one around the 15th of February 2005, which is a five-bagger on that period. And what I've done with two vertical lines is that the optimum point for getting in, the second line for getting in, would be about the 17th of December 2004. So you could, between those two vertical lines, keep buying up until the last line, when that would have been an entry point of about $24, still yielding about 70% return in that short period on the last trade in. If you'd taken it to the last point, you would possibly paid 49, got out, so you might have had a 15-16% loss perhaps. But that's not bad potentially for the amount for prospecting, if you like. So it's always difficult not to get in, the last man in, if you like.
Yep.
Hence, you sort of try and go between the two vertical lines, if possible. But that's the hard part, and that can put a lot of people off because they perceive that this is they're in the last person in, and that's why they don't like new highs. But if they're not, and there's a bit of yellow behind the whole thing, if there's high volume coming through, then I think there's every chance that we might be onto something here, especially if there's good news flow.
Volume's a very important indicator, isn't it? Because you can't really, prices can sometimes be manipulated
Absolutely.
by market makers if it's a quiet day, but volume can't be hidden, can it?
Absolutely right, and especially if it's going to new highs, because then the assumption is that that there is new money going into the market, and in this particular share it certainly did, and it certainly petered off, and it hasn't had that same intensity since, and producing that same sort of result. So this is a very, very significant pointer for further upside.
All right, Bill, let's have a look at the next pick, which is DES. Now, why have you picked this, and what does it tell you?
Well, there's a tiddler again. Well, this one is 185 market cap. This one again, looking for the yellow at the bottom. We've looked at this before, waiting for as a potential 10-bagger. This share is actually up 217% on the year, and this was a dormant sort of operation in the Falkland Isles, with no prospects whatsoever other than the acreage it held. And suddenly they have farming deals subject to the approval of the government. This company is introducing new partners which could, sort of with the high oil prices we've seen earlier, sort of turn everything around here. So again, I've introduced another indicator, other indicator here. This is the B indicator, which shows strength here, and this I like to be high as well. This high with an NDX high and high volume and new highs spell also the potential for further upside. And this one here is breaking at the moment. I'm certainly looking for this one to double from this level if everything goes according to plan.
And again, touching on what you said about the previous chart, you wouldn't be put off buying it at these levels, given that it's come from $20. The fact that it's come from $20 is unimportant.
This is sterling. Sorry, this is sterling. You were going to sterling, yeah. Yeah, but this doesn't matter actually. What the unit is, the whole gist of it is it has quadrupled, as you can see, in a short period of time here. Not at all, because I have a stop loss in there with those little red blobs coming in. They're stops. I use a stop, and I have no problem at all. And the whole thing here is like prospecting. You can't expect everyone to be a winner. And this is why we put 3 out today, 3 or 4 out today. In fact, you just don't take any one and put everything in there. You spread the risk and watch accordingly.
Well, we'll watch that one with interest, Bill.
Yep.
That's what was the name of that one?
Desire Petroleum.
Desire Petroleum. Okay, now let's have a look at the next one. Ticker symbol Hawk, HAWK. What's this company?
Well, Hawk is operating in America, Utah, in fact. This is slightly different from the other ones because it hasn't got that sort of explosive potential look about it, but there's a lot of yellow coming through. Again, I've got an oil price which is supporting everything. This is the key. The oil price is going up, which is supporting the smaller companies, making them more viable, making them more profitable, making the exploration risk even more worthwhile. So this one again is moving higher on the higher volume, slightly less fizzy perhaps than the other ones. Again, a small market cap, 104, but again 198% rise in a year. So it has got that sort of feeling of performance behind it. And this is one thing I do like. I like to have shares which have performance behind them. I don't want anything which isn't underperforming. I want something which is outperforming and performing very, very well in order to get a kick start. So this one here, again, about 70 pence, this one, looking very, very good. With a stop loss, of course, we had a stop recently on this thing. So if you were in earlier, you might have got out. But back in ready for action here, I hope.
So you'd be buying at these levels at what, 65, 70 pence? And
70 pence.
Would you have a target price on this, or do you just...
Well, I'll probably roughly double again, I would hope. Sort of depending on when a stop comes in. If a stop comes in and things don't go well, this is the thing is, by knowing too much about a company, not knowing too much, because these are speculative companies, if you hope that there might be something coming through, there has to be a measure of how you exit this one and how you continue holding on. Holding on as a gamble in case something comes good it sometimes pays off, but my preference is to have a stop somewhere on the line and follow the mechanical stop as it comes in.
Okay, Bill, that's Hawk.
Yep.
Now let's have a look at the next pick and the last pick for today, which is RKH. Tell us a little bit about this. Well,
Rockhopper's a smaller version of Desire Petroleum, which we saw a couple of goes ago. Now, there are problems here earlier on. The 2 points here I've highlighted as possible entry points is a hoop, which would have got you out, blue arrow in after consolidation, it shoots up, and then it peters away pretty quickly. But that can be part of the game, and sort of some people won't want to go back into this share because it's caused them grief beforehand. But what we've seen recently, up where the rectangle is sustained volume and price movement on the upside, coupled with very strong B indicator and good NDX action. So it's all pointing the right way. It's had a recent consolidation, which I like to see. It had a big drop down in between in that box period, but no red stop came in. So since the initial indicator came in, the buy signal at 45, 46, it's almost doubled already and heading higher. So, but again, I don't think it's too late necessarily if you're following a rigorous stop loss system. So stand back and wait.
Now, the simplified VFI at the bottom, is that a volatility index?
No, that's volume.
Volume, right.
So you want to see that turning up. That's like an OBV, version of OBV. It's a variation of OBV, which is as it accumulates, the idea is that it shows that there's more volume going into the stock, and it's subtracted as on a down day. So the higher that moves or the steady that moves up, it shows that the accumulation of volume is mounting, and that's what the yellow and green strip above that is based upon, roughly.
I see. All right. So that yellow strip means that you've got new highs on higher volume.
I think, well, that yellow strip is indicating that we've got higher short-term volume,
right,
with a long-term trend of volume going up.
I see.
Yeah.
I'm with you now, Bill. Okay,
Yeah.
thank you very much for that, Bill.
Pleasure.
So there are a few picks there for you if you're interested in probably slightly more speculative picks, but possible 10 baggers. Is that what you're saying, Bill?
Absolutely.
Okay, well, thank you very much for joining us this week, Bill. We will chat to you again next week. In the meantime, have great trading week. If you have any questions for Bill or any charts you'd like him to have a look at, do send them in. He'd be happy to have a look at them for you. The address is on the website. If you go to financialradio.co.uk, click on Chart of the Week, and there'll be a form on there where you can put your questions to Bill. Bill, thank you very much for joining us from Redmayne Bentley.
Chart of the Week with Redmayne Bentley.